GDP. GDP stands for Gross Domestic Product and represents the total monetary value of all final goods and services produced within a country during a period of time, or typically you can say 1 year. GDP is the most commonly used measure of economic activity. History of GDP. First basic concept of GDP was invented at the end of 18th century. The modern concept was developed by the American economist Simon Kuznets in 1934 and adopted as the main measure of a country's economy at the Bretton Woods Conference in 1944. Hello and welcome in economics channel, which is Eco Creative Mudra Mix. I am Soma Chakravarti. So today's session is GDP or upon GDP concepts. What does gross stand for? Gross indicates that products are counted regardless of their subsequent use. A product can be used for consumption, for investment, or to replace an asset. In all cases, the product's final sale receipt will be added to the total GDP figure. In contrast, net, if we are contrasting gross with net, then net doesn't account for products used to replace an asset in order to offset depreciation. Net only shows products used for consumption or investment. So what does domestic stand for? Domestic indicates that inclusion criterion is geographical. Goods and services counted are those produced within the country's border, regardless of the nationality of the producer. For example, the production of a German-owned factory in the United States will be counted as a part of United States GDP. Now, our focus on product or national, if we are contrasting domestic or national, then in contrast national indicates that inclusion criterion is based on citizenship. I just earlier told that about domestic. In domestic criterion, goods and service counted are those produced within the country's border regardless of the nationality of the producer, right? And if contrast to national, it indicates that inclusion criterion is based on the citizenship or your nationality. Goods and services are counted when produced by a national of the country, regardless of where the production physically takes place. In the example, the production of German-owned factory in the United States will be counted as a part of Germany's GNP or gross national product, in addition to being counted as a part of United States GDP. Now, emphasize on products. So what is product? Product in gross domestic product stands for production or economic output of final goods and services sold on the market. If we talk about what is included in the GDP, then final goods and service sold for money, only sales of final goods are counted because the transaction concerning a good used to make the final goods. For example, the purpose or the purchase of good used to, once more time, for example, the purchase of wood used to build a chair is already incorporated in the final good total value, price at which the chair is sold. And what is not included in GDP? Unpaid work. For instance, work performed within the family, volunteer work, etc. Non-monetary compensated work. goods not produced for sale in the market price or marketplace, bartered goods and services, black market, illegal activities, transfer payments, sales of used goods, intermediate goods and service that are used to produce other final goods and services. So, what is the difference between nominal GDP versus a real GDP? Maximum question comes from this topic. What is the difference between nominal or current GDP versus real, which is constant GDP? Let's have a look on this topic. Nominal. Nominal GDP. So, if we talk about nominal GDP, which is equals to face value of output. Face value of output. Without any inflation, adjustment, right? Now, what is real GDP then? Let's get into it. Real GDP. Name seems to be real GDP, which means constant GDP. Value of output, just opposite of the nominal GDP. Value of output adjusted for inflation or deflation. It allows us to determine whether the value of output has changed because more is being produced, or simply cause prices have increased. Real GDP is used to calculate GDP growth. Obviously, it's adjusted the inflation. We know, or because of that, we know what is the difference. Price, how much price increased, right? So, one question more arises, which is how to calculate GDP. Let's have a look. How to calculate GDP? GDP can be calculated in three ways. That is, using the production, three ways. The production, uh, in addition to expenditure, and furthermore income approach. In these three ways, the production, the expenditure, and the income approach, we calculate our GDP of the country and know the growth of our country. So, what is production approach? Let's have a look. What is production approach? How we calculate GDP via this approach. First of all, we just know the simple definition of production approach. Sum of the value added, which is total sell minus the value of intermediate inputs at each stage of production. What I said? I said value added at each stage of production. Expenditure approach. Sum of purchases made by final users. What I said? I said in expenditure approach, sum of purchases or being a purchaser or consumer, the sum of purchases made by final users. Next, what is income approach then? Because these are three ways how we calculate our GDP and know our country's growth. In income, sum of the incomes generated by production subjects. Obviously, when we produce some or when we produce some goods or services, we make some income or we make some money. So the sum of that income generated by the production subject is included in income approach. So these are the three ways how we can calculate GDP of our country. First we check our production, then our expenditure approach, and then income approach. So what is the GDP formula? Then question arises. GDP formula. The formula for calculating GDP with the expenditure approach, we are just talk about expenditure approach, and GDP, if I write the formula like GDP is equals to private consumption, right? Private consumption plus gross private investment plus government investment plus government spending plus export minus import. Or we can express this formula in this way also. GDP is equals to C, which is stand for consumption, I, which is stand for investment, G, which is stand for government spending, and plus X minus M, which is export minus import. So GDP is usually calculated by the National Statistical Agency of the country. So this is all about the information of GDP. What is the definition of GDP? One by one, what is stand for GDP? What its mean gross, means domestic, means production, history of the GDP, how we calculate GDP, what is the formula of GDP, what is the difference between real GDP and nominal GDP. Hopefully you like this session. Thank you.